Good evening. This is Tommy Lackey, and tonight is Tuesday night, February 11th, 2014. And I thought we would do a quick macro breadth review after the action we've seen the last couple days and see what kind of effects it's had. So let's jump right into the charts and see what we got. Okay, starting with the new high, new low differential, we see that the new highs have been growing over the last few days, and today had a nice little jump there. And the new lows have pretty much disappeared. We're down to only 8 new lows today, and that's flipped the differential back into positive territory for us. It's been growing as well. And also, it has pulled the 10 SMA of the differential back into positive territory. So at this point, we don't have any negative signals, but the fact that it stayed negative, the differential stayed negative for a few days over the last couple weeks, is certainly a warning, because we haven't seen that in a while, but not a red flag, in my opinion. And as we can see with the advanced decline line, this is part of the reason that the new high, new low differentials is not bothering me anymore, is that this still looks rather strong. Sure, it broke our trend line, but it snapped back above it very quickly, and as with any trend line, when that happens, we still want to honor that trend line. And we also see that we don't have lower lows here. We did get it slightly in price, but then we snapped back there as well, almost as if it was a failed breakdown. So again, we need to continue to respect this trend. Yes, we've been up a lot quickly in the last few days, so we might pause here, but the underlying breadth still looks pretty solid from a longer term perspective. The McClellan chart here is one that we've been eyeing very closely, because not only did we want to see the oscillator move back above zero, which it did yesterday, and keep going, we also wanted to make sure we saw the summation index turn up and not fall much more. And we did. So we've got a good start there. We still need the summation index to cross the signal line and then cross zero before we're totally out of the woods. But a good start for the rally that we're seeing, or the bounce that we're seeing. And again, every strong rally has to start with a bounce. So that's where we are right now on the longer to intermediate to longer term indicators. The breadth thrust indicator, like the McClellan oscillator being one of our shorter term indicators, has already done its job for now. It showed us an extreme that we could start putting on positions or looking for opportunities, and now it's working its way back up to the high side. And as you notice, many times you'll see, once you get a good nice thrust like we have here, you'll see some divergences and things like that as the markets move higher before we have another sizable sell-off. That doesn't mean that this still can't fail, but it is getting some good breadth underneath it as it pushes higher. Now we look here at the MA breadth chart, and I want to take an extra second here so we can discuss it, which we have. We got a great signal with the 20 SMA moving below the extremes, or the 20%, and then turning back up. The 50 is now trying to work its way back through the 50% level, 50-day moving average. And the 200-day moving average, or percent above those, has now moved back above our line of demarcation. Barely, but it moved back above there again just after a couple of weeks. So when we look at this, I still see this as a fairly strong signal that can move higher. And as many have been saying, this 200 SMA is showing a lot of weakness and deterioration. I'm not quite there yet. Just like that last trend line, the fact that we recovered it so quickly gives me a little hope that we probably have a little further before we have to really worry. Some consolidation would be great, but I'm worrying less each day about this rolling over and us making major new lows here right away. And of course, our final chart, the percent days chart, we can look back and we can see we really haven't even had any 80% days since that last 90% day almost 2 weeks ago now, that we were afraid might not work. But again, as usual, we look back and now we see that, yep, that worked. It was right there where we needed it to be, and it helped support the markets and allow them to have the almost a mini capitulation enough to get this bounce. At this point, we just have to see where the bounce moves to. Okay, well, there was a quick review of the macro breadth situation. Of course, we can't say for sure that we're out of the woods, but I would say that what I'm seeing so far does look like a pretty good move, and it does not look like it's incredibly weak underneath, as I've been hearing on some of the different TV or financial media. So to me, so far, I'd say it's constructive. Let's work with it. A couple days of consolidation would be great here. Even if it pulls back some, be looking and kind of seeing. We'll watch how these indicators work and see if they give us any more signals. But for now, I'm thinking we might have a little more gas in the tanks if we can hold up over the next couple of days. So hope that helps. Hope you all have a great evening, and feel free to look back at the strength in numbers report that's on my website, gtlackey.com. And if you'd like to be added to the beta list there, please email me at gtlackey@gmail.com. Thanks again and have a great evening. Good night.